This is Rukadowski of wearechange.org, and as we are speaking right now, the price of gold has actually went down, which is very interesting because allegedly this is happening because of the strength of the dollar. All of this as we are seeing a second wave of massive job losses, as many people, including the Wall Street Journal today, are saying that this, quote, slump might be worse than the Great Depression. But as of course gold is going down, interestingly enough, the stocks and futures are going up. How does that make sense as the rich are getting richer? And of course, there's a lot of things that just absolutely don't make sense. And to make sense of that, we have Amir Adnani here with us. He is the founder and chairman of Gold Mining Inc., goldmining.com. He's an entrepreneur and open-minded individual who's going to be breaking down a lot of the important stuff that's happening in our society right now, because it's absolutely crazy what's happening right now, Amir. How do you make sense of this all and truly unprecedented times, to say the least?
Well, look, I mean, as an entrepreneur, I'm focused on building businesses, creating jobs, creating economic activity, and I'm a commodity mining focused entrepreneur. And so for me, one thing you learn very quickly, to have kind of to have what it takes to really be in the mining business, you got to think about cycles, you got to be cyclical, and you got to be counter-cyclical. And so, look, I thought it was crazy what was going on in the market already, even prior to all the COVID-19 induced debt levels and the experiment with fiat currency that's now gone absolutely kind of crazy here. And so I became interested in building the company that we're going to talk about today, gold mining, back in 2011. And when we had a bear market in gold, we were acquiring gold resources in the ground. But now we enter 2020, and now you're talking about, every financial metric we want to talk about has an unprecedented in front of it. This is absolutely remarkable when you think about it. I mean, whether it's the level of debt that we've put on, the Fed balance sheet ballooning to over $6 trillion in just a couple of months. I mean, this is how much debt that we had when we emerged from World War II. And that took years and a global war to put that much debt on. And here you look at these incredible levels of unemployment number, the human tragedy that's associated with all of this. But then the monetary response is something like we've never seen before. Okay. Yeah. And so ultimately, I mean, for gold, you have to consider that gold is no one's liability, and it's not something you can just print. The way the debasement of fiat currencies is taken on. So I think the more we see with the slowdown in the economy, and it's going to have bumps along the way before we get back to normal, there is nowhere but to print more in terms of quantitative easing, as they call it, but just print more and more money and debase currencies. We may even end up with negative real rates in the U.S. as much as the administration and the Fed doesn't want it.
Yeah, you brought up a good point, Amir, that because there was problems here even before this major crisis that the world is dealing with. After 2008, everyone saw what happened, and they're like, wait, this problem wasn't fixed. It was paid over with more debt, with more bubbles, and it's only going to explode and cause a lot more pain and havoc. And right now, 3.38 billion people estimated in lockdown. Entire industries shut down. Some of them that I think won't come back. What do you see here as the kind of longer kind of change to the supply chain, the longer kind of change that people should kind of anticipate here as well?
Well, it's a question of really thinking about your wealth and savings and really thinking about money, because when you think about what it means in terms of wealth, right? This idea that that you should be compensated, right, by the sheer fact that you might be a saver, right? And when you look right now at the fact that the 10-year Treasury is yielding almost zero, the 10-year Treasury, right? Then these are artificially low rates that are reducing your compensation in terms of your purchasing power, just basically being deteriorated, right? And so this is almost this global experiment now by governments to force us not to save and to force you into the stock market, to force you into buying assets, real estate, cars, whatever it might be, to get the economy going. And look, I look at the fact that that to me is ultimately the protection that gold provides. Gold is the haven of last resort. It's, again, the one thing that cannot be, it can't fudge it. And so as a result, you end up, I think, with my prediction here being that it's going to take us longer to get out of this recovery, because it is there's just so much uncertainty in front of us. And at times of uncertainty, where the only thing certain is this idea of to infinity and beyond when it comes to the amount of easing that the central banks want to have, gold becomes almost a solution. Just today, you look at what JP Morgan published today, was quite interesting, calling gold a winner and saying that they saw it as a hedge on both sides of whether we would have deflation or inflation. And this is interesting because it really just goes back to real rates. Gold's ultimate relationship is to real rates. That's nominal rates adjusted for inflation. And the moment we end up having more and more negative yielding debt globally, and again, I go back to pre-COVID-19. Pre-COVID-19, we already had close to $10 trillion of global debt that was yielding negative interest rate. And that number is only going to get bigger and more out of control. And so the more of that relationship we have, where we have negative interest rates dominating the financial landscape, the more that's going to basically drive up the gold price. It's the suppression of real rates. It's going to be with us for a long time, because we don't know what the end of this recovery looks like, how long it's going to take to really get back to a new normal. Obviously, we want that to happen as quick as possible. But along the way, you gotta, in my opinion, you gotta hedge and you gotta protect your wealth, and that's what gold is here to do.
Yeah, I mean, you definitely brought up a very important point about the long-term effects. Since, again, one thing that's important to note here, these effects, we were still not feeling all of them. And when you look at previous economic trends, it takes a certain long time to really feel the true ramifications from these major actions. And I could say, holy cow, there's going to be a lot of major actions, as of course when we have central banks and the feds and all the governments literally giving out money to, of course, the people who are losing money in Wall Street, the hedge funds, the companies that Ben Bernanke's working for right now. All of those people, they're having their losses socialized. Their profits, well, they're just privatized when the market's doing good. But again, everything here is just extremely, completely backwards. What do you make of the government's actions, the stock market being up, and these latest prices that we have for gold?
Well, everyone to some extent, I think, is doing their best to deal with the invisible enemy, as it's been called, because there's no playbook for this. I mean, it's difficult to have a playbook for something that no one has really seen who's in power today. And so you're going back to all the old tricks, right? You're going back to what happened in 2008. We had a banking crisis. And so you're taking out that playbook and you're trying to throw it at basically a biological crisis. Well, again, you can see why it may not be the right tool for this issue, but at the same time, it's uncharted territories. And the scale of the mobilization we have for 7.5 billion people in the world, we've never had this much mobilization and movement before. And so hence all the lockdowns. And so to some extent, makes you wonder if policymakers are winging it as they go along. One week they tell you to wear a mask, the other week they tell you not to wear a mask. And things are changing on a daily or weekly basis. And it's concerning. I mean, as a person, as a husband, as a son, as a father, all of those things, you think about your loved ones, and you're concerned by it. And so I think, look, I think these are very complicated times. The market, it's amazing that the recovery in the global stock market has been so proportionate to the amount of injection that's been, in amount of liquidity that's been injected into the system. So it just makes you wonder, is the response in the market right now analogous to a patient who is, not feeling well, but you're just pumping a lot of morphine into them, and so they're just feeling okay for the time being, but there's still some big issues to overcome, and we got to heal. The system has to heal. We got to get through this, and we got to see some clarity in terms of policy and movement and progress ahead. And that's going to happen. I'm a positive, optimistic individual. I think you have to be an entrepreneur, but you have to also think about downside. You got to try to balance it all out. So it's going to be an interesting kind of period ahead of us here, Luke. And so I'm following a lot of the stats and figures that you're following, and I think the gold price tells me one thing, which is the ultimate truth machine. It's trying to tell you, and it's trying to predict that there is going to be a real debasement of fiat currencies. And that to me is ultimately what, as an investor, you got to pay attention to, is what is the gold price trying to tell us? Because it's harder to manipulate the price of something that you can't print. Fiat currencies can be printed, and that's the big difference.
I like that analogy that, the analogy that the economy is on morphine and it's just being pumped and injected. Some people say injected, some people say transfer of wealth, but that's a whole nother argument to have here. I mean, when you compare the economy to just the person on morphine, some people have compared it to a toothless crack whore on fentanyl, and who knows where you stand on that argument, but I bet the people in this video will let you know which is the more kind of accurate kind of portrait here. But as everything was developing, as everything was happening just a few months ago, seeing the lockdowns, seeing the big potential economic impact, I started talking to the viewers in my videos, and I was like, this is not financial advice, but maybe this is a good time to look into gold and silver. And right after I did that, a week or two, right after I started talking about that, you couldn't get it anywhere. This is the crazy part. I tried to buy it. There's 8-week delays minimum, and those are the soft estimates on even getting some precious metals into your account or into your hands. You're working, very specifically in the gold industry. What are you seeing with the supply constraints? What are you seeing with the demand? What are you seeing happening on the back end that people should know about?
Well, I witnessed it firsthand in terms of that shortage of gold coins. Right before the things really got bad with the crisis in February, my 12-year-old son. I personally come from a background where I valued and my family, would cherish the concept of buying gold, and you would get it for maybe birthday presents, and you would hold on to it. And I still have gold coins that my grandmother gave me. And so my 12-year-old son asked for gold coins for his birthday in February. We got him a tiny gold coin. And in March, when I contacted the same store to try to get more, it was impossible. And my 12-year-old got a kick out of finding out that he had got this gold coin right before it became impossible to get it, right before 3 of the 4 refineries in Switzerland for gold shut down, right before as of the latest count, there's something like 300 mines globally that have been shut down because of health and safety concerns with COVID-19. So this is a hard asset. This is the part we talk about when we say gold is a physical asset, is a haven of last resort. You can't just make it up. You can't just print it. And so that means it physically needs to be mined. It's got to be shipped around. And so with all global flights halted, and that's how gold gets around the world, is on airplanes and on commercial flights. That meant the movement of gold from the mine to the refinery to getting to the London, New York, Hong Kong, Singapore markets was all disrupted. And to this day, it hasn't fully gone back to normal. But this also, I think, reflects the fact that over the last decade, we generally had a raw stock market. We had the aftermath of the 2008 financial crisis, which meant this incredible amount of capital that was injected then, which has again been dwarfed recently, that led to these all-time high stock market moves, a lot of it driven by share buybacks by these big companies, but it really just suppressed the gold price. So the gold industry was under investing in the entire supply chain, starting from mines, starting with resources in the ground, all the way to that gold coin that you would try to get. And to this day, there is a differential or a premium for being able to get your hand on physical supply of gold versus the paper trading of gold on the COMEX, for example. But we also had a decade of underinvestment in exploration, because remember, gold is a mineral. Before you can mine it, you got to look for it, you got to find it, you got to permit the mine. Permitting of mines, according to McKinsey Consulting, could take upwards of a decade, depending on where you are. But it's been taking longer and longer and longer to go through the cycle before you can even have a mine, before you get to the other stages of the supply chain, and you have a gold coin in your hand. All of that really means that today, not only do we have a stronger gold price of 1,700 compared to the last 6 years or 7 years, but you look at the forecasts, you look at the fact that the same big banks that for the longest time shunned gold, they don't want to talk about gold. People on CNBC would call gold a barbaric relic. Those same groups are now advocating for a higher gold price. If a year ago you asked me or asked someone, what do you think the gold price is going to be? And I said $3,000 an ounce, you might think that I was a gold bug, one of those crazy gold bugs. Now you have the Bank of America calling for $3,000 an ounce gold. You see this all quick turnaround all of a sudden, where the organizations and the groups that seemed for the longest time were not interested in gold and trying to kind of talk it down, now they can't help it, because all their clients probably, and all the wealthy clients that they probably manage money for, they're all saying, I'm not going to have any of this stuff. I don't want to have anything to do with this grand experiment of just printing our money out of a problem we can't even see the end in sight. I want to protect my wealth for me and my, for my kids and my grandkids. I'm going into gold. And then you see these banks have no choice, but they got to listen to the clients. So you see now what's starting to happen, but it's happening at a time where the supply chain does have vulnerabilities, and it's on full display with what we've been seeing over the last 60 days due to COVID-19.
Coming at you from a different angle now, Amir, obviously a lot of gold people are very happy with what is happening right now. With gold nearing 8-year highs, people are talking about the new gold rush, and of course we're entering a bullish market. Now the gold market has done well, the broader market has done well, the price of gold has done well if you could actually get your hands on it. But what are some of the different things that you're seeing from your mindset, from this kind of entrepreneurial perspective on how to take advantage of the situation, since of course it's difficult for many people to get into the gold market? What are you thinking? What is different from everyone else that you're doing, Amir?
As an entrepreneur, I sort of looked at this as a business and said, how do you build a business around the gold sector and the trends in the gold sector? And you have to remember, currently the gold price is at an 8-year high. And it was exactly 8 years ago that the company that I created, that I'm the chairman of, called Gold Mining Inc., made its first acquisition in 2012. And since then, when we ended up in this long bear market environment for gold, when the gold prices were on average around $1,200 an ounce, today they're at $1,750 an ounce. But during an environment where gold was almost $500 an ounce cheaper, we began to acquire and accumulate projects that were at a resource stage. And what does that mean, Luke? In the gold business, you have projects that have to go through exploration, where you got to look for the gold, you got to drill for the gold, you got to be able to quantify how much gold is in the ground. Just that could take hundreds of millions of dollars of investments before you can start any kind of production. This, by the way, one of the reasons why it is such a valuable asset class, gold as a hard asset, is both the combination of its scarcity, but also just the amount of time and capital it takes to pull gold out of the ground. And so what I was interested in was to acquire projects that had been drilled, where you knew what kind of resource was in the ground, it had been independently verified, but pre-production. And then you would just roll up as many of these projects as possible. We made acquisitions with our company in 2012, 2013, all the way up until even recently, where we've put together a very diversified resource portfolio, gold resource portfolio, in 5 different countries in the Americas. Very mining friendly countries. We're talking about, obviously, right here in the US, Canada, Colombia, Peru, and Brazil. And today, when you look at the total gold resource base that we've assembled, in all categories, just over 24 million ounces of gold. When I say category, I'm talking about categories of resource classification, bit of a technical mining thing. But when you independently verify gold, it ends up in either inferred, measured, or indicated categories, all ways to define how much gold is in the ground. Well, as you can appreciate, that's a big resource space. And it's taken us 8 years to put it together. So I'm not looking at this saying, wow, look, gold is hot now. You got to get into it now. I thought it was a great time to get into it 8 years ago. And during this time frame, while we were making acquisitions, the gold mining industry, the producers, were depleting their resources and reserves. In fact, this is the trend that is so bullish today, is that during the last 8 years, the producers of gold, the big guys, the big major names, like Barrick Gold or Newmont Mining, they were just focused on producing gold from the ground and not investing in exploration and development. So today, you look at research reports that have come out from big names like Bank of America. Their global research put out a note earlier this year saying that there had been a 42% decline in the reserves and resources of major gold producers since 2012. Because of low gold price environment, they underinvested in exploration and development and focused on just their balance sheet and reducing their debt. Well, this creates and really kind of feeds into the narrative on why we have a strong bull market today. Because not only is the central bank and government policies to drive negative interest rates, not only is that a very bullish reason to own gold and why we're seeing the increase in the gold price, but at the same time, we have the physical side of gold, the mining side of gold, which has undergone a very long bear market. And so now, as we kind of get into this bull market environment, you can't just flick a switch and have gold production just come out of the ground. It takes time to drill for gold, look for gold, permit a gold project. And then we've already talked about all the disruptions that we've seen in the world today because of the virus, with moving it around physically around the world, refineries that have been shut down. And so ultimately, the business that we've built, if I put some numbers around it, we've spent about over $80 million since 2012 acquiring these resource stage gold projects. And look, if I look back to what these assets were worth in the last bull market for gold, when we got to $1,900 gold, they were worth over $800 million. So if you think about it, we've basically been making acquisitions for 10 cents on the dollar, spending $80 million during the bear market for gold, during a period where gold was at $1,200 an ounce, buying assets that when gold was at $1,900 an ounce were worth 10 times greater. And today we're, I believe, heading in that direction because the company's market cap is sitting at around $180 million or so. And so we've seen a nice lift on our total acquisition costs, but still trading and being valued at 1/4 or 1/5 of kind of where the cumulative value of the asset base that we've put together was, at a time where there's probably the most unprecedented fiscal and, more importantly, monetary response to the virus being rolled out in the world. The trillions of dollars already on the Fed's balance sheet and more to be added, unfortunately. But it ultimately is the reason why not only is the gold price so strong, but to see this unprecedented level of capital flow into the physical ETFs for gold, physical holdings of gold reaching really record highs. And so I think one of the best ways to play this, Luke, is really to acquire gold resources in the ground. And that way you also don't have the operational risk and headaches right now in the kind of post-COVID-19 world that companies have to deal with.
Yeah, very, very unpredictable times, and I'm very happy I put in my orders way before this kind of craziness unfolded. If some of the people listen from this video, again, not financial advice, but it's worth considering with everything that's happening. On this YouTube channel, we always say the best commodity you could have is, of course, your family, your neighborhood, your community. And then, of course, when you look at all of that on the outside, what other choices do you have? You have, the bloated, crazy fiat dollar system with just crazy printing, and then you have alternatives. And I think it's worth considering and looking into the alternatives. Amir, thank you so much for sharing all the important information about what is happening with gold on the back end. Anything else you want to say? Anything else you want to go over specifically when it comes to gold and the global economy right now? And also, where can people find you?
No, I think we covered some really good ground. I mean, the work that I'm doing at building Gold Mining Inc., you can find out about that at goldmining.com. You can really, I think, in terms of where and why we think the gold price is moving higher, I think we covered that already. Look, I've had a very contrarian bent to being there, paying attention to gold before it became topical recently. So I think for those of us like yourself and your audience that have been looking at gold as a place to, as an asset class to be exposed to, I've been there for a long time. And I think if someone's looking at this for the first time, got to do your own research, look into it, understand why it's an important asset class, and to learn more about what I'm doing as an entrepreneur, that's at goldmining.com, and that's a great place to get information.
With the way that the system is, contrarian is definitely the way to go, as of course it's all folding on in itself into it right now. Goldmining.com, the website will be in the description, so you guys could check that out, and of course check out more from Amir. Thank you so much for joining us. Really appreciate that. Don't forget to stay tuned for more here on this independent media organization that's provided by you. Amir, thank you again, once again, for joining us. Really appreciate you. Really appreciate everyone. Stay tuned for more here on wearechange.org.